Types of trading. So in this video, I'll be going over what type of trader you can be and the cycles of the market. So this will give you the overview of what type of trader you can be. It's not just, oh, I trade. There's many different types of trading, and you can choose to suit your personality, okay? So let's start with this side, and we're going to start with day trading. So day trading, in my opinion, it's not bad. It's a lot more stressful because you have to enter the market a lot more times, but you can make a lot more money, if you're good at it. So for certain people, this is how I started out. I started out day trading. So this is what it is. So if I do a bit of an annotation, if I do some lines on this kind of uptrend, then this will be where I'd be entering. So you'd be entering a lot more often. So each line is where I enter. So imagine this was a day, you'd be entering at each line, okay? So you'd be entering a lot more. You have a lot more chance of making money, but at the same time, the more times you enter the market, the more times your money is at risk of, you losing it. So when I first started out, a lot of beginners start day trading because, they're so in love with it, they fall in love with it. They want to be on the charts all the time. And you need to do that at the start because you need your practice, but it's just something to take in consideration. It will take a lot of time. So swing trading is what I do. It's my personal favorite. I can enter, 2 or 3 trades on Monday, let's say, or Tuesday, hold them over till, let's say, Thursday, Friday, and then I can close them out in profit. So I can enter them on Monday, so let's say, and then you get out Thursday, and I can do my other business ventures, all these other things that I can do. So swing trading is why I love it so much, is I can make money passively in the background while I run a business, while I can kind of enjoy my life, do whatever I want really. And that's why I love trading, because it's the freedom. So this is what I like to do. It's not always going to be, oh, you enter it Monday and you leave it Friday. Sometimes it might be Monday till Wednesday, then you're done for the week. Sometimes it might be Monday till next Monday and you just hold it over the weekend kind of thing. So that's swing trading. So last but not least, we have position trading, which is basically where you enter, let's say you entered in January of this year and now you're holding it till December. It's now December and you hold it for 12 months or you hold it for 2 years, 3 years, 4 years. This, if it's an overall bullish sequence, you can make money like that. That's how some people like to trade. It's more like acting like what stocks would do. You enter it now and then you wait 5, 6, 7 years for it to appreciate, and then you can kind of sell the stock. And that's something else I can get into at a later date. But position trading is good, if you want to hedge a long position. So hedging is where you'd enter, I'll here, then to here, then I'll enter here because you're still long, okay, you enter here. So that's what hedging is, but that's for something later on. So that's kind of the 3 kind of traders you can be. Day trading, day trading or intra-day trading, it's basically the same thing. So if someone says to you, I'm an intraday trader, they basically just mean, they're on the 15-minute time frame, entering, like 10 times, 15 times a day, something like that, okay? So that's kind of what intraday trading is. You wake up at 8, you do 2 hours worth of trading, and then you're done for the day, and you can do whatever you want. It's market cycles. The one that I do the most, or I use the most, is retracements. Okay, so this is where price would be in an uptrend or a downtrend. It's in a trend, so we can identify that. So here it's in an uptrend. All we want to be doing, if it's in an uptrend, what is it doing? It's going up, right? So we want to be buying it every time it comes to this zone. So each time it comes to these little dots here, this line, we want to be buying it, okay? So we don't try and sell it back down. We just buy, buy, buy. Same if it was going down. If it was going down, it was going like this. 1, 2, 3, you'd be selling it at each point, okay? Every time it hits the trend line, you'd be trying to sell it. So this is just a retracement. So if it's going down, 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 the retracement is the opposite move if you see it like that. So that's what a retracement is. This is kind of our favorite and the one that works with our strategy or my strategy. Trending is, this would be if it was in a bullish trend and it's been in a bullish trend for, let's say, 2 or 3 years, you can identify the bigger trend, you can act accordingly, and same if it was in a bearish trend. And then last but not least, we have consolidation, which is basically in a market where it's in this kind of range, but a lot of the time, it can be consolidating. So it will just be hitting a resistance and then hitting a support, okay? So these are the cycles of the market. So this is my favorite, or one of my favorites to trade, well, it is my favorite, okay? Retracement and swing trading is how I like to trade, okay? So I've been through day trading. It wasn't really for me because I want to be doing other stuff. My aim is to have like 4 or 5 businesses in the future. So I need to be working towards that. And swing trading is perfect because it gives me an income in the background which can pay for me to launch my businesses and all the other stuff that I want to do. So yeah, that is types of trading. And hopefully you guys will understand it a bit better. So which one will you choose?